Yo guys, so this should be the last video for this year, 2024, and I want to wish everyone a Merry Christmas and a Happy New Year. Alright, cheers! Thanks for being a supporter of my channel for the past few months, and I'm also happy that I'm able to advise some of you viewers out there on how to actually structure their property or which property to buy. So thankful for all the support in the past few months, and I'll continue to create better content. Okay, so moving on to today's topic, right? I'll be covering on GLS and how I actually study the government land sales in order for my clients to make their purchase in the new launch market or even in the resale market. So stay tuned if you want to find out more. Okay, so this is called the upcoming new launch or GLS strategy. So in order to be able to see this effect, right now I'm going to do a case study of how a new launch actually have a very strong and positive effect on the resale property beside it. So this is a case study of Parc Clements versus the trialing. So just to give you a bit of background information, so basically this is Parc Clements, and then Region Park is over here, and the one that I'm comparing with is actually the trialing, which is right beside over here. So in this area, right, actually you can see there has been a lot of $1 million HDB transactions as well, and we are all within walking distance towards Clement MRT. So this is just something to orientate you around the Parc Clements and trialing area. So now, right, we want to study trialing versus Parc Clements. What happened to trialing, right, at the initial part from the launch in 2013 all the way to 2019. So you can see over here, I zoom in a little bit. Basically from the chart, right, this is for trialing one. From 2013 all the way to 2019, right, actually it has been stagnant for 6 years. So why was it stagnant for 6 years and actually it incurred a 5% loss over a 6-year period? It's because they overpaid for an OCR property back in 2013. So I think you can imagine for 2013, right, how much they were actually overpaying for a Clement property. I'm quite sure for $1,500 per square feet, there were a lot more attractive buys in the market. So as a result, you can see why they suffer a loss over 6 years. And actually not all hope is lost at this point, because in 2019 Q3, right, we actually have Parc Clements launching. So you see, over here, right, I wrote trialing TOP in 2017 and then Parc Clements TOP in 2023. So if you look at the chart itself, right, so you can see over here in the 2016-2017 period, right, this was closer to trialing TOP, and as you can see from the volume, it means that a lot of people actually prefer to not wait so long for the property to be done. So as it closer to the TOP date, there will be more demand coming in because eventually everyone wants something brand new. Okay, so at the point where I would say trialing recover, right, is mainly because of Parc Clements. There could be people that say, oh, it's due to the COVID, COVID actually made every property in Singapore profitable. But from what I see over here, right, I'm just using Parc Clements and trialing as a case study. So back in 2019, right, when Parc Clements was launched in Q3 2019, the price gap between trialing and Parc Clements was only about 10%. So to me, for a newly TOP project in 2017 to a new launch that is going to TOP in 2023, the price gap is really quite low and attractive at this point. And fast forward until today, 2024, right, we can see that trialing, the blue color line, profited about 23% from 2019, the time that Parc Clements launched. And then when you look at Parc Clements, they appreciated in the same time period of 33%. So this outperformed Parc Clements. Parc Clements outperformed the trialing by about 10%. And then today, if you look at it, for the newer property Parc Clements, the price gap between trialing and Parc Clements is about 16% now. So do bear in mind, if in the event you are comparing between the resale and the new launch, and then you feel like the price gap is quite big, as you can see over here, eventually the price gap still widens because I think people are still willing to pay a higher premium for the resale. And my main point is that you can see, I'm quite sure it's because Parc Clements was selling very well and it was a very good project. And you can see today, Parc Clements already crossed 2,000 over per square feet. And as a result, when the buyers, they want a Clement property, First of all, they will go for Parc Clements because it's the biggest plot and the newest in the entire Clementi area. But if they are unable to get something at Parc Clements, but they like the location so much, right? Maybe because of the primary school, or maybe because it's Clementi itself, then they will still settle for trialing because it's like the second newest there, and at the same time, we are looking at a 16-17% discount from Parc Clements. So definitely this will bring the resale price of trialing. There will be positive spillover effects. Okay, so now I will show you, right, the trialing's profitability in the past 1 year. So you can see over here, you can see the profit margins are for trialing, right? From 600 plus K, you have 200 plus K depending on the unit size. But overall, right, it recovered. So now we compare to Parc Clements. Parc Clements, right, also had very sizable profits. You see, you got 300 plus K for the smaller units and even 800 plus K for the bigger units. So all these things, it does help trialing overall in the resale market. So main thing I want to emphasize is that you see we have a higher profits in Parc Clements over the trialing, right, in a shorter holding period. But at the same time, this also provided recovery for the resale at trialing. I think today you have to ask yourself, definitely if we look at these two projects side by side in terms of profits, right, it does seem like buying trialing when Parc Clements launched, it made a very good value buy also because in the end you can see most of the owners did profit for trialing in the end. And at the same time, even though you are buying into a kind of like 2-3 year old project, I would still say it's quite okay because Parc Clements is going to TOP in 2023. So in 2019, if you made the move on the trialing, right, you will have saved almost 4 years of rental. So this one, it really depends on individual. If you already have a place to stay and then you don't have to purposely go and rent a place in order to buy a new launch, then I think you can consider this strategy for yourself. It really does make a lot of sense because you save on rental, and rental, right, unlike new launch of the potential profits, you are saving a fixed cost because for example, maybe you're renting about 3 to 4K a month, right? Then you times that for 48 months. That one is like your real cost, and these are the amount of money that you confirm can save, right? And you compare to, let's say you buy a new launch, you still need to fork out this. So it's a chicken and egg game lah. But at the same time, when you shift into maybe Parc Clements, the newer project, you do enjoy everything that is newer, but you have to fork out the rental for the 3-4 years period. So I just want to highlight this was that in 2020, right, you can see this OCR 3-bedroom at Clementi. It was between 1.39 million to 1.74 million, depending on the size of the 3-bedroom. Okay, and today, right, we already have for OCR 3-bedroom, we're already starting from $1,900 per square feet. So can you still buy a 3-bedroom OCR below 1.74 million? In today's market, I think it's going to be very difficult to find something like this, especially for the new launches. I'm not talking about resale lah. Yeah, so you can see the effect of the land price and the construction cost increasing over time as well. Okay, so I just want to wind back the clock, right? So this was one of my first few clients that actually went with me to buy Parc Clements in 2019 during the launch day. Okay, so you see, wow, actually I look so much younger than 5 years ago. Time flies. Okay, so during 2019, right, I don't know if many of you were in the market back then, but for me, I had to do my analysis for my client for Parc Clements versus the surrounding resale condos, which is mainly trialing and as well as the other Clementi condos, and also need to compare to the other launches during 2019. So of course, we made the decision to go for Parc Clements after a series of considerations, and then now we are sitting on really healthy profits, right? And right now, right, he's actually considering to go on to a bigger asset, upgrading from their current purchase at Parc Clements. So I think all these things back in 2019, definitely nobody foresee what was the potential profits today. But I can tell you, when we compare the projects in 2019, definitely Parc Clements was one of the top performers in today's resale market. And how do we achieve that? Is because we already have done the analysis for Parc Clements versus the resale condo nearby and also the other launches. So I think this definitely helped my client to have clarity, and now in the resale market, they are able to exit easily or even considering to upgrade to a bigger asset. Okay, so now I'll be touching on the upcoming GLS and the new launches in Clementi area. So I'm quite sure most of you guys have heard about this particular plot that is called Elta. Okay, so this Clementi Avenue 1 GLS site, right? We are looking at the PSF PPR of about 1250 by MCL land and CSE land. So this one, we are estimating about 2003 PSF range. Of course, this one will depend on what's the developer's indicative pricing, but we are estimating around 2003. So this is the site area, right? You can see over here. So this is the site area for Elta. So they are right beside two very profitable launches, and which is Clavon and Clement Canopy. So over here, some people might think it's not near MRT, it's right beside the expressway. But if we look at Clavon and Clement Canopy, definitely there are two projects that are in very high profit margins. So for me, right, I only look at in terms of profit margins. It's not really about whether it's near MRT or it's facing expressway. So right now, why am I talking about these particular two resale condos when Elta is coming up? Because what are the resale options near Elta? So you can see just now I mentioned about the trialing being unprofitable, but then after Parc Clementi's launch, right, it did bring up the prices at trialing as well. So right now, if today you really like this Clementi area and you are already priced out by the potential starting from prices for the Elta, which is around 2002, 2003 PSF, then right now, if you can still afford Clement Canopy or even Clavon, should you consider strongly for those two options? Because if Elta today launched at 2003, you think about it, right? When it hit the resale market in 2029, so this is 2024, 2025 when it launched. So imagine when it hit the resale market in 2029, right? How much PSF do you think the owners will be selling at? So my rough estimate, okay, so maybe around 2,600 PSF. Then this will in turn have a spillover effect, right, to Clavon and Clement Canopy. So if today you are already priced out of this Elta over here, then you can consider these two also. And definitely there's no wrong because you actually save on the renting costs if you consider Clavon or Clement Canopy. And Clavon, being a brand new TOP project, I think it's quite attractive to some of the buyers also. So if you really don't want to wait too long, I think you can consider these two, okay? But of course, a lot will depend on the facing, which one is the more profitable facing, because this is how I foresee it. It will perform even better in the resale market also. And at the same time, from studying Clavon and Clement Canopy, this is how I will position my clients for Elta as well. So, if you're interested in Elta or any of these condos, you can feel free to reach out to me for a complete overview to see which is a better option for your scenario, because I think every client has different needs and wants. Maybe some of them are willing to wait a little bit longer because they want to get a newer property and they don't really want to pay the highest price for the TOP. So you think about it, right? Today, if you buy at the highest price at Clavon, yes, you might still profit down the road, but definitely it will be a lot lesser as you compare to maybe you buy a brand new launch at Elta. So yeah, which are the more profitable facings and layout in each development. So from all this, I'm sure we can study to make sense of how to go for facing and layout at Elta. And also at the same time, we can study which one at Clavon and Clement Canopy makes more sense to buy and hold in the resale market as well. Okay, so the second GLS that's coming up in the Clementi area, right? This is nearer to the AYE there, is the Faber Walk area. So here we have Guapo Land bidding for $900 per square feet PPR for this Faber Walk GLS site. Okay, so it's over here. So when we look at this objectively, right, you can see the area itself. So what are the resale options near Faber Walk GLS? So I'm quite sure if you guys have been in the market long enough, you have known all these three condos. So first one is Parc Riviera, very famous for its profits also. And at this Faber Walk area, right, it's quite grand in a sense, like facade and the building itself is a very nice development. So it's kind of atas, okay? And Twin View and also Whistler Grand. So with all these three projects, right, we can already study how to position ourselves for this Faber Walk by Guapo Land. Probably in 2025, 2026, we will see it launch in the new launch market. But today, I would say you're still kind of early. If you are already priced out of this brand new Guapo Land development, right, then maybe you can consider Twinview, Parc Riviera, or even Whistler Grand. Because same thing, if Parc Clementis can do trialing wonders from an unprofitable to a profitable development, think about what will happen to Parc Riviera, Twinview, Whistler Grand. So all these things will have the same spillover effects, I am very sure. And over here, we can actually see the land price over time. So when you look at these three projects that I just mentioned just now, West Coast Vale and Faber Walk, they are just one street across, right? You can see the tender date, right? 2015, 551, 2017, 592, 2018, 800, and today, right, 2024, we are looking at 900. If you ask me, I think this 6-year gap, right, it does kind of feel like a bit low in terms of the gap, like the price jump, because you see it from 2017 to 2018, right, actually there was a very big jump. It was about $200 per square feet jump in terms of the per plot ratio. So when you look at this objectively, the Faber Walk one, right, only increased about $100. So if you ask me, for a 6-year period, it does seem like this could be a potentially very attractive buy in 2025 or 2026, depending on when it launches. And of course, this is the land rate, so I think usually you need to factor in the marketing cost, all this. So right now, right, we're just comparing the land rate, which is the PSF PPR that the developers paid for each plot of land. And from here, we can kind of estimate how much they're going to be launching at. And you can see based on our PropNext research, our estimate is around $2,200 per square feet. So if you think about it, right, what are the resale prices at Twinview, Whistler Grand, and Parc Riviera? If the Faber Walk site is going to launch at around 2122 PSF, imagine in the resale market maybe in 2030 when this Faber Walk actually TOP, they very likely are going to be maybe selling at 2005 in the resale market. So all these things you need to already take into account if you want to buy into a property. I'm quite sure all this information you already can forecast what is going to happen 5 to 6 years down the road. So even to buy a resale property, I think having all this GLS site information, right, will help you make a very informed decision and position yourself in a better chance of having a higher profit. So this is how I would advise my clients with GLS information and new launch information. Okay, so now this is the upcoming GLS or the new launches. Okay, so just now it was for Clementi area, and now we are looking at Singapore overall as a whole. Okay, so this was the previous list. The left side is the previous list, okay? And then the right side, right, is the most updated one in December 2024. So you can see over here, the previous list, we have up to 15 plots of land, okay? And then some of it was already awarded, some of it was not awarded, open for tender. And then here is the date where it will be launching at. So you can see now in 2024, right, December 2024, all these land are still remaining open. And then here we have additional 6 new plots. So these are all going to be launching in 2025. They are just putting it out there. It's not open for tender yet. So you can see the government's direction. They are slowly releasing plots of land every other quarter based on the announcement. And today, if you ask me if this information makes sense, okay, I just take an example, right? Let's say we take Telok Blangah area. If today you already know that the plot of land there is going to be launched, right, in when June 2025, then why not you position yourself earlier into one of the resale at Telok Blangah area? So maybe you look at the skyline, residences, all this. So I think all these things does play into the strategy that you're looking at. Because if today you're buying the resale, I think there's nothing wrong to consider a Telok Blangah resale over there. And maybe Lakeside Drive there, of course there's the new launches which is Sora and Lake Garden residences, but they are not as close to the MRT. So those closer to Lakeside Drive, which is right beside Lakeside MRT, maybe we're looking at Caspian or some of the other older resale condos which is right beside Lakeside MRT. So I will position myself and my clients according to what are the GLS that's coming up. Of course, this is bearing in mind that you kind of want to have a new record high in terms of the new launch pricing set by someone else. So I think this might be helpful for you if you think that you are more towards, you want to buy something that is a resale but you don't really want to lose out in the capital appreciation part. So I think this will help you in the resale market. At least this is how I would identify good buys. Okay, so now moving on, we'll be looking at the reserve list sites. So over here, right, you can see there's only 4 sites that's available. So Marina Gardens Lane, Holland Plain, Media Circle, and Rio Valley, Parcel C. So all these, they are under the reserve. I wouldn't place too much emphasis on this one. I'll be looking at more of the confirmed sites for sale lah. So just now, as I mentioned, we already kind of know, let's say the Faber Walk, they're going to launch at how much, which is maybe around $2,200 per square feet. So when you have a rough gauge of how much it's going to be launching at, then you look at the resale over there. So I just go to the example. Yeah. So maybe we look at around 2002 PSF. Then if you see just now my analysis for the trialing versus Parc Clements, right? Their gap was about maybe 10% gap from the resale to the new launch. So it will depend on whether the Faber Walk site is going to launch at 2002. Then we look at the resale projects there. If the price gap is significant enough, right, then it does make sense to go for the resale property because very likely it will still breach over time. Even though maybe the Faber Walk one, the new plot, they will profit more, so the gap maybe will be the same thing from 10% to like maybe 16%, 17% in the same time period. But at least you are still buying into a project that can profit over time. Yeah, main thing is you want to find out what is the potential new benchmark in the area, and then if you know that the gap is quite wide, right, then you can identify that this is a value buy. Yeah, because I can tell you today as individual buyers, right, we won't know as much as developers. So if the developers actually price a certain land at maybe $900 per square feet for the land, then I think they probably know more than us as individual consumers because they have a whole entire team for research and all that. So definitely I would say I will follow the developer's price guide as a better sense of where the overall market is heading towards. Okay, so over here is the upcoming land plots that I have put on the whole Singapore map. So of course this list is not exhaustive, but for me I just want to give you a rough overview, right, of what I can do for my clients. So when we see all these yellow plots that is not launched across Singapore, what you want to do is either you want to keep a lookout for the resale around there. There is a big price gap from potentially the land is going to launch at how much, because I'm quite sure if you're able to estimate how much a land is going to be launching at. If you don't have an idea, you can feel free to WhatsApp me. And so from here, you already know what is my strategy, because you see, the moment you see there's a certain upcoming plot, right, and all this is not awarded yet, so you have about a 1 to 2 year lead period before the launch. So I think these are the attractive time period, right, that you can look for the resale to hold for the maybe 5 to 6 year period, because you need to hold for that period is when you need to wait for the launch to be launched, and then you need to wait for it to be DOP in 4 to 5 years time depending on construction speed. So this is my general strategy with the GLS and new launch if you are considering a resale today. So now moving on, this list is not the full thing, but I'm just giving you an overview, right, of the land that is already sold. So you see Canberra over here, 793 PSF PPR, the Souza Road, 841 PSF PPR. Then you can see Elta, right, 1250 PSF PPR. We are looking at around 2003 to be in the new launch pricing estimate lah. So from here you also can estimate how much Faber Walk will be launching at. And then Margaret Drive 1154 PSF PPR, River Valley Green 1325 PSF PPR, the Ori 1360 PSF PPR. And then we have Park Town Residences. Okay, this one is a bit different because this one does include the commercial space. So of course the PSF is going to be a little bit different because commercial and residential calculation is a bit different. So do bear in mind, we still estimate the launching should be around 21 to 22 PSF range because it's an integrated development. So from here, you already know how to position yourself in terms of the resale or even the new launch market. So this is the estimate from my company. So you can see, right, is in Norwood Grand, they estimated to be above 2000 PSF. This is A&BT to be above 2.6. This one is Nava Grove. This one will be Elta. The Marina Gardens Lane one not out yet. So we have Lentor Central coming up. Then this one, Lorong 1 Toa Payoh will be the Ori. You see above 2.5. And then now we are looking indicative should be around 2.6, 2.7 range. Tampines Parktown Residences above 2-1, Jalan Tembusu, so this one is Emerald of Katong, so 2-4. So all these prices, you already kind of can estimate based on how much the land was bought for already. Okay, so now we want to look at the current launches right in the market right now. So over here, these are the current launches that I would think is the slightly bigger ones. Okay, so Sora, Lake Garden, Norwood Grand, Hillock Green, Lentoria, Mist, Hill Haven, Trump Park, Arcady, Grand Diamond. So all this is kind of forms the overall new launch in the current launch market. So with all this information, right, you kind of can already position yourself if you want to look for a resale nearby all this, because they are already creating a benchmark. But of course, in my personal opinion, if you wait until all these launches already launched, right, then you look at the resale market there, I think it's too late. I mean, you take a look at what happened to, say, Trump Park, right? And I also observed the resale prices at Bartley MRT area. Everything went up. So I think as a result of people being priced out of Trump Park, or they couldn't get a unit at Trump Park, then they started to move further away from Lorong Chuan area. Then they start to look at Serangoon, Bartley, and I would feel like that's a bit too late already at that point, because you already know what is the developer's launching price at Trump Park. So I would say if you want to prepare for all this, start to look at the GLS, right, to actually prepare yourself for the resale there. I mean, I'm not saying that there's completely no opportunity, because based on some of the projects over here, I have identified a few of the project, right, there is a very big price gap from the resale versus the new launches there, and I feel that the new launches, I feel that the resale over there, it does look like a value buy as compared to the new launches here. So if you are curious to find out about all this, you can feel free to drop me a WhatsApp, because I think this will be very helpful information for you, especially if you are more concerned about capital appreciation. Okay, so right now, what can we do with all this information, right, that I just shared with you? So I had a client that I also did the same analysis, and then this was their resale search criteria. They wanted a 3-bedroom that has an efficient layout, below 10 years old, within 700 meters to MRT, within 2.7 mil budget, as long as there is potential for growth. There is no particular area, but cannot be too ulu. So that is how I actually came up with this entire framework, right, to look at the GLS as well as the new launch, to study what is potentially a value buy in the resale market. So over here, these are based on just now that criteria, and also in the OCR region. Okay, so I split it into two. One is OCR and one is RCR. So all the red color dots is within 700 meters to each MRT. And then you can see the numbers. It does mean there is certain number of condos out there. So with all this information, right, let's say I just take an example. So this is the lakeside area here. When I look at this, it does seem like maybe you can consider this, because just now I have already mentioned there is Sora and there is Lake Garden Residences. So these two are the new launch that is currently there, that is setting a new high in the area. And if you look at the GLS, there is a Lakeside Drive land plot that is going to be launched next year. So all these things does create a new high in the lakeside area, and I feel if you are looking at potential for growth, then maybe you can consider this lakeside area. But I know certain people feel like, wow, lakeside very ulu, all this. That one I cannot help you out. But for me, this is how I potentially can identify the resale there still got potential for growth because of a newer high benchmark set by the new launches and the GLS in the area. Okay, then now moving on to the RCR area. So same thing, same search filter, but just that it's in RCR. So you can see we got some in the Ang Mo Kio, Bishan area. Then here will be closer towards Kallang side, and then here is like Tiong Bahru area, Queenstown. So this one, right, I just put in summary. Okay, so my strategy is I want to follow towards where the new launches is. So you see, I categorize this is like the Lentor, Lorong Chuan area for the 3-bedroom. So we have identified, right, these are like the better square feet and the layout types to go for if you were to consider this area, if you can accept this area. So I shortlisted all these resale condo there, right? Then we make a comparison. If the resale, this PSF is already in the resale market, then how much more are we paying for the new launch if we are considering for the new launch? And is there any price support for the new launch over there? So some of these layouts also I've studied, right? So they are very likely to perform slightly better in the resale market as compared to the similar layouts in the development itself. So very important, if you are going to the resale market, you must understand that you will already, your first pot of gold is already earned by the first buyer. So what you want to do now as the second buyer, right? You want to optimize into buying a better layout which has a higher chance of profit. Yeah, so based on all this, you can see I have highlighted two, okay, that is green color, which is, I would say, value buy in a sense. Okay, so one is Thomson Grand, and the second one we are looking at is Gem Residences. And what I identified for the 1055 square feet, unfortunately at Gem Residences, there is no units on sale at the time of recording. So I think all these things, it really need to depend whether there is the certain layout that I have identified, right? If it's even selling in the resale market. So for all this, I take a lot of time to compile all this. Then, okay, you might think why I actually have Gem Residences highlighted even though it's still in 2K PSF. Because for me, when I look at this entire area, right, Gem Residences is going to be right beside the Ori, and the Ori, we already know how much they're going to be launching at. So if today you are able to snag this 1055 square feet at a good PSF beside the Ori, which is Gem Residences, right, then I think you are in for a very good round of capital appreciation. Because you can see if today the Ori we are launching at, is it 2024, is between 26 to 27 PSF. Then fast forward to maybe 2030 when it hits the resale market, how much will they be selling at? So maybe from 28 to even 29. But today, if you buy Gem Residences at around $2,000 per square feet, even though it's not that low in the resale market, right, I do see that Gem Residences being right beside Ori, of course the product must be kind of similar lah. I don't think it will lose out that much by a gap of $800 per square feet. So if today you are able to get a good layout at Gem Residences, I think it's a strong contender, especially when the Ori hits the resale market 5 years down the road. So one thing why I didn't recommend my client to go for Thomson Grand, even though I highlighted it, is because over here, right, you can see the layout. It's a bit blur here, but just bear with me. So basically, there's this very huge balcony over here, and they have a second balcony here. And on top of that, the AC ledge is also this size. Yeah. So, and you must take into account, right, this unit also got the private lift. So I think with all these factors inside, the overall unit, even though it's a very big unit, the usable space is quite similar to what we're gonna see maybe in a typical 1001 square feet unit. So you need to see through the data, which is the layout, or you have to go for your own viewing to actually see and feel the unit. Then you realize it's actually not that big. Yeah, so when I was going through this deck with my client, of course, I did mention about the Ori, but this is already a few months back, okay? So this one, we already identified that there is no supply here. So this layout, I can see is really quite good eh. It won't lose to Ori, because you see the balcony is covering the living and dining area, and they don't really have much wasted space. They have a utility room here, so that one can double up as a helper room or storeroom. Then the bathroom, the kitchen, the master bath, all got windows. So this one really, I think is gonna be a decent layout that will perform well in the resale market. But unfortunately, there is no supply. So I think when looking at the resale market, sometimes you no choice, right? You only got a certain layout to look at. That's why it really depends on what you are looking for. Whether you are looking for value for money, you don't want to rent, you just want a place to stay, all this, or nearer to parents. So all these things, I think, differ from individuals. But you see why I researched this way is because just now my client, they didn't have a particular area that they were looking at, but they just wanted somewhere that have a higher chance of capital appreciation. So this is how I actually identify. Okay, so now we move on to, you see, Beauty World Hillview area for the 3 bedrooms. You can see Daintree Residences already transacted at about $2,200 per square feet. Hillian, they have 1796. Bukit Panjang MRT, and in the resale market at that time, it was 1163 square feet, asking at 1977. So I think this was definitely quite a big jump from the last transacted. Of course, I told my client, if you're able to get a good deal here, you can consider. But of course, for them, they felt like Bukit Panjang was a little bit out of the way for them. Yeah, but other than that, of course, we have to negotiate for better pricing. And then Jurong area, as I mentioned just now, the lakeside area, Sora, Lake Gardens, and the GLS, You can see Lake Grande 1847 PSF, Lakeview 1858 PSF, and Lakefront Residences 1723 PSF. And these projects are all within 10 years old. So I think this potentially is a big price gap. So let's say if you're looking at lakeside area, you can consider Lakefront Residences or even Lakeview, because these two I feel like it's gonna be a very big gap, right, from the potential land, the lakeside GLS that's gonna be launching next year. So I think you are in a position that's early enough right now, and maybe the market haven't feel the effects yet. So of course, it will depend on whether the resale market there is all these listings available. So if you are looking at these areas or projects, then you don't know how to compare, oh, you can feel free to drop me a text also, because for me, I really kind of just look at what is the upcoming supply and how to position my clients, right, in the short to medium term to have the best possible spillover effects. So we want to recreate what Parc Clementis did for trialing itself. So Clementi area, you can see Parc Clementis, we already have 2003 PSF. So if today Elta is launching at around 23, is it something that is very expensive? Is it overpriced? So all these things you need to ask yourself when these are the prices that is transacted in the resale market. And then the trialing, we are looking at 1981 PSF. So you see all these prices is already out there in the resale market. You can do your own research. But this is the stuff that I will compare for my clients if they were to compare for a new launch, or whether they should buy a resale, which one is more value for money. And then now we have the Queenstown area for the 3 bedrooms. So why I have the Queenstown area is because just now I mentioned there was this Margaret Drive land plot. So over here we can see the PSF that is transacted. 22 PSF for Margaret View, Sterling Residences 2450. These are all transacted. These are not resale listings. These are transacted. Commonwealth Towers 2003 PSF, Queenspeak 2294 PSF. So all these prices, right, it already forms like the new benchmark for the Margaret area. Then I think I'm quite sure for yourself, if you know that the Margaret Drive, that land plot is gonna be launching next year, right? If let's say you see if it launched in 2025, right, we probably will be looking at 2029 to be TOP. Then from here you really can kind of gauge, right, whatever price you're paying today, then you just need to plus about 5 years, 4 years into it. Then you see if today what you're paying, are you overpaying or are you underpaying? Like, is there a value buy in it? So all these things will help you kind of estimate and gauge based on the land, how much the developer paid for it, all this. So you see, right, this is the overall comparison between the past cycle and our current cycle. And I believe we are in the midst of going to a new cycle, okay? So you see the previous one, it was between OCR area, 1004 to 1006 PSF. We are looking at Affinity. Then we look at the RCR area, which is over here. You can see the Trevor, Sterling Residences, Penrose. You see that time they were launching at 1007 to 1009 PSF. And I can tell you, right, back then, there were still people that was thinking, oh, is this PSF like too high or not? Am I paying a record PSF? And then CCR area, you can see 1 Burnham, 25 to 28 PSF. 1 Pearl Bank, 27 to 28 PSF. Landmark, 26 to 28 PSF. And this is like I said, Landmark, 1 Pearl Bank, they are Ocean Park MRT. And now we are looking Toa Payoh Bradder area, right, already going to be launching close to this, which is back in the previous cycle. So right now, the current cycle, right, you see, in the 2K to 2.2K PSF, for the OCR, you see the MIS, 1009 to 2000, Lentor Modern, Lentor Hue, they're all within this range. But moving forward, right, you see next year, we have Elta. Elta is going to be estimating also 2003. Then you have Parktown Residences. That one also we estimate about 21 onwards. So I think moving forward, right, you need to understand these are like the new PSF already. And this range, if you can still find something in the current cycle, I would say it's still potentially a good buy. And then moving forward, this will be the new PSF. I think if you look at Trump Park itself, it's still considered OCR also, and it already commanding about 26 PSF. So this is already the new benchmark for the OCR area. Then we look at the current cycle, Continuum, 23 to 25 PSF, Tembusu Grand, Grand Diamond, Pine Tree Hill, Terra Hill. So all these prices, you see, they starting from 23 to even 26. But when we look at the new ones coming up, definitely it's going to be inching higher than these prices already. Then of course the CCR area, we have $3,500 to $4,000 per square feet, Newport Residence, Skywater, Walton Estate. So with all this, right, you can see the comparison between the past cycle and the current cycle. So what is coming up next year, I believe, will be the new cycle already, because you can see the projects in the current cycle, right, most of them are about 70% sold, 80% sold. So moving forward, what are the launches coming up? You need to already have a gauge. Are they still pricing the old pricing? Do you think the developer will price them at the old pricing, or they will move on towards a new benchmark? I think what was very surprising was what we saw at Norwood Grand, Trauma Park. Both they are creating like brand new highs in the respective areas, and the buyers are very receptive of it. So they're leading to very strong sales. So I think today, if you are unable to accept a certain pricing, right, do bear in mind that there could be another buyer that it does feel like it's something that they will consider, and therefore the units are moving at this kind of rate lah. I feel like you cannot be stuck at the old pricing. Okay, so last but not least, for the Ori, they will be starting preview in January 2025. If you want to take a look at the show flare and the development, and you want certain advice on the stack analysis and whether this is a value buy, feel free to scan the QR code, right? Or you can click the WhatsApp link to contact me for a preview together. Alright, so thanks for staying all the way to the end. If you found my sharing useful for you today, feel free to drop me a like and subscribe. And if you would like a personalized or tailored consultation for yourself, feel free to drop me a WhatsApp message also, okay? So that's it for me today. Bye!